And good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Sunday, December the 17th, 2023. First, my sincere apologies that I went through, get all that information, put on good charts, and then didn't realize that my mic was on mute. So therefore, thank you everybody for letting me know that there was no sound. Hopefully this is now going to work. I will double check. But let's get started. I'm going to try to do more of a condensed version. First of all, just to let you all know, I have been working pretty diligently all weekend on updating the long-term charts and taking a look at a lot of information that I've been receiving about what a lot of the marketing internals. First of all, a lot of money's been coming into the markets, as we all know. So based on that, I've tried to go back and to figure out really how and what effect that's all going to have on the markets, where the money's being placed. What is that really telling me in terms of what wave count we're in and how high we may or may not go? So I put that all together and I've made some slight changes starting here on the NASDAQ. I'm on the daily chart, realizing that we remain within, under my view, a primary B wave counter trend rally or a primary B wave advance. The change is going to come in that instead of it working its way higher to put in a primary B wave and then a primary C wave down to put in a cycle degree A wave, there's a big difference, and that's where it's going to come in. Just slipping very quickly out to the weekly chart, you're going to see that change. This before was cycle wave 5 and then super cycle wave 3. I've backed it off. I've gone through, I've rearranged the labeling, not necessarily the counting of the waves, but the degree. I switched the degree and I moved everything down 1 degree. And it fits to what we're going through now, where we're expected to go, and then how that fits into that much longer term picture. And this I came about because I was reading, again, all the different things that are occurring in the market, and particularly the large inflow of capital, and that many things are changing on that front in terms of how do we want to interpret that? Are they coming in at the top? Are they coming in with different or varying reasons? And again, a lot of that we have witnessed via the triggering of the Zweig breadth thrust indicator, which has been triggered twice in 2023. The last time was in November, about mid-November. We got a really gigantic market breadth thrust. And now we saw it again last week. And when the Fed made their decision and after the press conference, the market really started to move, and it moved on volume, and a lot of volume came in, and we just really rallied very, very strongly. And by the end of the day, the advanced decline was again very strong, advancers over decliners. So again, the money continues to flow in. And so we're seeing that being placed. And I believe that there's just a large change underhand in terms of what really things are going to be based on, and a lot of the underlying strength that is going to go along with whether the market really is going to have a soft landing in terms of a recession. Interest rates, are they going to be cut? Are they going to be hold steady? Those are still factors that are going to come into play. But now we're beginning to see that I've never really called for a crash. I'm not saying that the market is going to crash. I've always discussed it as a correction that will lead to an additional strong leg up. And that remains in play right now. Even though I've lowered the degree of what is going on in terms of the largest size picture, the large picture, being that we completed in January of 22, a cycle third wave. And from there, we're putting in a cycle fourth wave that'll still consist of a primary ABC. And I'll still be looking for that C wave to drop the market below 3502. And trust me, we're going to be dropping from closer or above 5,000. So it's still going to be a major decline, but it's not a crash. It's going to come off in 5 waves. So there'll be, 1, 2, 3, 4, 5. 2 and 4 will be corrective to the upside. So we are going to continue to see two-way trade, but it's going to be directed more with just a switch, another flux, another move in terms of rearranging positions and getting out of something and getting into the next. And that may happen after the start of the new year. And then I would suspect that by the time they're figuring that we're going to start to see interest rates be cut, which right now just really goes between March of 2024 up to July of 2024. So anywhere within there, they're expecting it to start. That doesn't mean it's going to happen. There's a lot of other things that are going to affect our market. But overall, I'm looking for a correction to be followed now by an additional strong leg up. So let's dive in to where we are. Coming down to the daily chart, you're going to see that once again, I've made a slight change within what we're actually doing. And the reason is because right here, I had counted this originally as A, B, and this was the C wave, and then this was ABC, and it was an X wave. I don't like that X wave because it kind of puts this into a much, much stronger position to go way beyond 15,307 in terms of being that we needed another intermediate degree ABC. So I went back and I looked at it and I thought, okay, that this is primary wave A finishing right here. Then we had an A wave, and I think an A, B, C for a B wave, and then a 5-wave C wave to finish intermediate wave A of primary wave B. Then this decline, which broke all the rules in terms of that it busted any 5-wave sequence that we had going on for wave C. It was not even, I couldn't really even consider a diagonal for wave 1, which was alive for a little while. But again, so when all of this started to break down, that then changed it. And I thought ABC, XABC, which was what I had it labeled before, but I put it in as intermediate wave B, which puts us in intermediate wave C, which cleans up. Now I'm going to go back down to my hourly chart, and it really cleaned up this. Because this before would have had to have been an intermediate wave A and intermediate wave B, and that just did not fit at all. But it does fit in terms of a minor 1, a minor 2, and what we're in is a very large minor third, which it should be. So this isn't even including all of minor wave 1, by the way. So I'd have to go out to my 4-hour chart and just to show you very quickly going from here. So we can see minor 1, minor 2, and we're in minor wave 3. And within that, we are in still looking to complete minute wave 4. So we got minute wave 1, minute wave 2, and then 1, 2, 3, 4, 5 for minute wave 3, looking for the completion point of minute wave 4. So we're leaving that open. Right now, we may come down still, but this actually came down beautifully, 2.236, which is like, okay, not the best type of a correction, but the absolute minimum has been met, hit it on the nose. But I'm leaving open the possibility and the potential that we may drop one more time, either back down to 47.46, which would make it nice and a flat ABC, or we drift a little bit further, maybe down towards 41.17.18, which would then complete minute wave 4. We start to rise in a minute 5th wave. Now, having that in mind, what I put up next would be, let me change this. We're looking at what could happen if, no, wrong one, sorry. Let me go back over here. And so I've already put that up for wave 4. So and this is actually, I want to use the word guesstimate, but it isn't really. That would be based on the fact that wave 4 did complete here. And that what we're starting is a 1, 2, and we're going to start to go up. So I'm going to go back down to my hourly chart, and then we'll get inside here and we can take a look. So again, wave 2, and 1, 2, 3, 4, 5, wave 3, wave 4 may be still in progress, or wave 1. Excuse me, wave 4 here, 1, ABC 2, and we should start to rally. Now, I'd be looking for that to pick up pretty quickly here now that Asian markets are opening. And once we get into the European markets, it should get that push that we need to see. And then the S&P will, basis the future, go to new all-time highs. That all-time high is 48.08. So putting these in line for minute wave 4 being complete and a minute 5th wave, What are we looking at? The most simple would be 618, and that's 48.80. So that's already a new all-time high territory. But wave 5 is related to wave 1 on a fib basis. The most common is 100% equality, and that's at 49.63. Let's not forget what we're completing is a minor third wave up here. If that's as high as it gets, and again, what we're looking for is a 5-wave rally. So our first line is 48.80. Our second line is 49.63. Now, coming out over here, these are for the correction, should it still be in play, and that's where those are coming in. The 100%, which is at 48.08, that's just the marker for the all-time high. If we continue to move higher, I have additional fibs coming in here, and then one more coming above. Now, this one, I'm going to go back out very quickly to the 4-hour chart. I think I can pull it up there. Yes, that is where wave C would be 100% times the length. It would be equal to wave A. That's at 51.87. So again, what are we forming here? An irregular B wave, which I have discussed from the moment that the all-time high came in January of 2022. As we were beginning to drop, I discussed how all the different variables that could come in and that we could look for and realize. And one of them was, and particularly I talked about it in October of 2022, when we launched off of that low, that the market could be putting in or has the ability to put in a regular B wave, which is where that B wave, which we're in now, would take the market to new all-time highs above 48.08. Was that what I was looking for at the time? No, not necessarily. And it continued to unfold and look like it was going to drop, that we had a B wave in and it was going to continue to drop and go lower. Well, different things come up, but that alternate view never went away. So again, I don't think I've ever really discussed or called for a crash. I'm not looking for a crash. I've always been looking for a correction. And there are different things that we can go and we can look at as to what's happening within the market and compare it to past times. We can look at the great financial collapse of 2009 and how that really didn't cause a recession. The market did not fall into recession. The market did not fall into a recession or depression. It rallied, and it rallied strongly off of those lows for particular reasons. Now, that at that level, it was because interest rates the government and the Fed and the Treasury adopted zero interest rate policies. Now, that's not saying that that's going to happen again, or every time the market drops any extended period, that the Treasury and the Fed are going to immediately just go to a zero interest rate policy. So we may see interest rates begin to decline, but it's not going to be for the same reasons. We may not see this 2% target for inflation to be met, which would create a situation where the Fed would hold the interest rates higher. We may see interest rates start to come down, but inflation creep back up, and the Fed then starts to raise again. So all of those things remain out there. So we cannot count on anything. So again, one of the things I've discussed, and we'll discuss in more detail coming up on the big picture update, is that the status quo, that is what always remains, right? This is the way it always is. This is the way it always happens. This happens and that happens. That is being broken. It's being rearranged. It's changing. What always was is not always what will be. So that's a major factor. We're seeing a whole new sector form and take hold and draw in billions of dollars in investment and in new companies, startups. So we have venture capital coming in. We have private equity coming in. We've got tons of money coming into the markets right now. And that, again, is producing a lot of upside. But as things calm down or they go through, we will correct, not crash, we will correct. Again, back to the S&P. So what I'm looking for here is, again, the completion of a minor wave 3. Then we have a minor 4, and then we have a 5. So again, wave C, 5187, equality, that's always going to be your number one as far as when we're in a corrective phase. Wave C equal to wave A, 5187. Wave C equal to 6.618 of wave A comes in at, let me take that back down and I'll show it. Comes in right here, which the market, yeah, I would think that my count's way off if it only comes in at 4801. And so if it misses going to a new all-time high and starts to collapse from there, that would be pretty outstanding to me. So the 618, I think is out of the not going to happen. So in fact, let me just do one thing. I'm leaving it there because it is a fib. But I'm going to take it off so we're not getting any confusion that I believe that the market is going to rally, go to a new high, and that we'll be dealing with levels up here. So again, we're looking for the completion of minute wave 4, which may already be in. If that's the case, we're looking for minute wave 5 to complete minor wave 3. And that we'll be looking for from 4880 up to 4963, possibly higher. But that's going to be our initial zone that we're going to be looking for. And then we're going to get a minor 4th wave and a minor 5th wave. And that minor 5th wave is where I'm looking for it to go ahead and break again and move more strongly higher. This would come off if we get to that level, pull back, and then rally again, because this is for minute wave 5. Over in the NASDAQ, it's also going through its changes. Now, just to pull this out, and take a look at that daily chart. Did we go up that high? Nope, I got to go out to that weekly. This is just a preview of what I got coming up. Here again, I dropped everything 1 degree. So what we finished is a primary 5th wave and a cycle wave 1 instead of a super cycle wave 1. Now, I use the cycle wave 1 simply because there's not that much data in the NASDAQ. So the NASDAQ wasn't around in 1935. The NASDAQ wasn't in the 50s and 60s and 70s. NASDAQ began, I believe, in the 70s as a composite index, but the NASDAQ, 100 goes back to the 80s and really is based on a lot of the technology. That's what's made it just an astounding index. Now, what I can be more confident with is that we finished a primary 5th wave. So dropping that down, what I thought could have been cycle 2, 1 and 2 back in 2000 is changed a little bit in terms of degree. And so I have cycle wave 1. And so I'll go over that again in the big picture. But right now, let's just say that we are in a primary degree ABC, same deal. And what we have going up here in the NASDAQ, none of that has changed. So I can drop it right down and let's go right to that 4-hour chart. And we're going to see here that what we have is, again, minor wave 4. And we have minute 1, 2, 3, 4. We're in the minute 5th wave. And that makes it very interesting. There are some possibilities that this minute 3rd may just be completing. So again, I'm going to be very careful as things extend, but they do extend. They're extending this, produce some incredible advanced decline numbers. This, was, a little preview to what may be expiration. So we may see more of this. So we may even see, again, point of clarification, the NASDAQ future has gone to new all-time highs over its previous high of 767, I believe it was. Now we've reached above 16,000, almost 900. But the cash market has not moved to a new all-time high yet. So it's very important to kind of keep all of that in mind. So we're getting a little bit of a rally in the NASDAQ, in the S&P right now. So let me just go over and look at the NDX and pull that open to my weekly chart. And what we can see right here is this high is 16,764.65. And the high thus far is 16,669. So we're almost there. We're almost there. So we still got a little bit more to go. But I believe that we will. I believe that the NASDAQ cash will move to new all-time highs, and it'll do it in an irregular B wave. Now, here are the irregular numbers that we're looking at. How high can this market get? They'll adjust. So this is basis. I'm on the weekly chart. This is not the March contract. So that being factored in, you'll see when I take it down and even put it on my daily chart, you see there's this big gap. I see that coming in, it's like, oh, look at that. That's up higher. This is up higher. So I can make that adjustment, but I'll leave these here because they still are applicable on the weekly chart. So those numbers are 18,250, 19,168. Those are for the irregular B, which I believe we will do. Back down here, what we're looking at, here's wave 4. We have 1, 2, 1, 2, 3, 4, 5 we're looking for. So I moved that third. We're still looking for the minuet third wave to be complete. So we get a good rally going, and where can that complete? Well, we've got a whole bunch of numbers sitting right in there. We have right now the 0 line, but this is for if the market decides it still needs one more little drop down to 16,757-ish. A, B, and a drop down in a C wave to put in a very small, I believe it's going to be very small wave 2. All right, this is 3 and this is 4. That's 1 of 5, 2 of 5. We'll get 3 of 5, and we'll be off to the races. But if we don't, and we do it now, then it's kind of a little weird positioning, but it could be that we're going to finish up this third. If not, then I can put it on. It would be a little bit much, but I could put the third wave here, the fourth of minuet degree here, and possibly that's what's still in progress. And then that, if that breaks, then we're looking at it coming down to 16,727 to finish in that minuet wave 4. So it's a couple of counts that are going on right now, but ultimately, I do think we go again. We already have, but not by much, but get ourselves up to these levels up here. And that's going to be that this right now for wave 5, we have 100% at 16,903. If that works and we go 5 and I can put that minuet wave 3 up here, or a little bit higher, then we're going to do another 4, and then we're going to get that 5, and then we're looking at up here, 17,131, and then all the way. It could go all the way. Mind you, it's all the way up here where we start to get the larger B wave projections. The 1.618 is going to be for minor wave 5, and that's pretty high as well. So I'm going to leave it right there for right now. We're not seeing very much. The NASDAQ trying to rally, but it's really the Dow and the S&P and the Russell trying to put something in. Again, my apologies for not noticing that I was on mute. I'm going to try to get this done real quick and get this all posted. And our next update will be on Monday, the 18th.